Hello everyone, Tomo from the Market Zone here, and this is a new weekly market analysis follow-up video that reviews the price action of the first trading day of the new trading week. Hey guys, Tom from the Market Zone here. Thank you for coming back to my channel and thank you for watching this video. As I try to do each week, the purpose of this video is to summarize and review the price action of the first trading day of the new trading week and what has changed since I posted the weekly market analysis, which this week was on Monday and not on Sunday because of the French elections. Before I start, I just want to remind you that if you haven't read the weekly market analysis yet and you want to do it, you can find it at www.themarketzone.net. Go to the weekly market analysis tab and read the first post there. Obviously, I will also leave a link in the comments below. Now let's start, and I want to start with the dollar index. That when I wrote the weekly market analysis earlier this morning, it was pressing towards the 98 support zone, the harmonic support zone that you see here. Instead of reaching to 98, we've seen a bullish intraday bullish reversal in DXY that drove DXY all the way up to 99. That's the daily resistance zone that includes a broken trend line, 200 days MA lines, and the faster MA line. That's a strong daily resistance zone that DXY will have to struggle with if he wants to continue towards 100. So instead of looking for bullish opportunities, bullish reversal patterns inside the harmonic support zone in DXY, a scenario that could have led to bearish opportunities on some of the majors like EURUSD and GBP/USD, scenarios that I mentioned in the weekly newsletter today. What we got now is bearish opportunity on DXY and therefore bullish opportunities on some of the majors, again like EURUSD and GBP/USD. For example, if DXY will decline back towards the harmonic support zone from this resistance zone, we could see a short-term rally in EURUSD, and that's what I'm going to show you right now. EURUSD opened the week with a gap up following the French election results, a gap up that was followed immediately with profit taking that drove EURUSD back towards the downtrend line that EURUSD broke out from last week. Now there are two price zones that I think that you should monitor this week when it comes to EURUSD. The first one is 1.09, 1.095. That's a price zone that I mentioned in the newsletter. We have a structure here. It was resistance, now should act as support, and we also have the broken down trend line that also should act as support if this breakout was real. This price zone can drive EURUSD back towards 1.1, maybe even 1.11, but in order to see such bullish reaction, I would like to see the price reacting to this zone today before the close. Buyers will push EURUSD higher, and that will perhaps provide me some confidence that this support zone will hold. The second price zone is even a stronger one, and it includes these tops that you see here. So if I will show you, it includes these tops as I mentioned, and also the 200 days MA line and the faster MA line. That makes 1.08, 1.085 a potential support zone for EURUSD, a very strong daily support zone that could provide EURUSD the bullish momentum it needs to break out of the downtrend and continue towards 1.11 and maybe even 1.14, which is the extended target zone of the bullish wave based on my weekly chart analysis. Jumping to equities now. This is the S&P daily chart, and we saw today some profit taking also in the S&P. The profit taking led the price towards the key price zone that I mentioned in the weekly newsletter. The key price zone, as you can see, provides support right now, and the two scenarios remain valid. The bullish scenario will remain relevant as long as the key price zone will hold the support, and the bearish scenario, the false break scenario, will be relevant if S&P's price will close below the key price zone. That means that we have a false break. This will be a false break, and we can see a pullback towards the trend line and the 50 days MA line that will provide support pretty much near 2,370. That's the price, the target zone of the bearish scenario. But probably the most interesting thing that we saw today, and everyone talks about it online, Twitter, Facebook, all social media deal with this issue, is the fact that the VIX is now testing 2007 lows, despite the fact that the S&P is in red, the DAX is in red, CAC is in red, everything is in red, and still the VIX is crashing down to 2007 lows. I zoomed out to the monthly chart, and now you can see that we are testing the lows of 2007. This is January, February 2007, right before the global crisis of 2008, and you can see the impressive spike in the VIX. And also, if we will go way back to 93, 94, we can see that the VIX tested the current level and spiked from there. So if you are going long equities right now, despite the bullish sentiment, you need to accept the fact that you are facing a risk, historic risk, that the VIX will spike, and if the VIX will spike, the S&P will fall and stocks will fall as well. So take this into consideration if you're going long equities right now. And the last chart for this video, crude oil that is respecting the PRZ of the bullish gauntlet that I mentioned in this week's newsletter. I talked about a potential pullback in oil that will drive prices back towards 45, create potential double bottom scenario inside the PRZ. We did see a pullback, it didn't reach 45. I'm not sure that the bearish pressure in oil is over, so pay attention to the zone between 45 and 46. That's a potential buy zone based on the harmonic pattern that can drive prices back towards 48, 49 and $50. That's the final target zone of this harmonic bullish scenario. Pay attention to oil. Still lots of rumors, lots of talk regarding OPEC meeting and the potential production cuts. Interesting pattern to watch this week. That's it for this video. That's it, guys. Thank you very much for watching this video. I hope you liked it. If you liked it, I appreciate if you'll share it on social media, and don't forget to subscribe to my channel, activate notification. You don't want to miss the next video that I'm posting. And last thing, don't forget to subscribe to the weekly market analysis. Go now to www.themarketzone.net. Go to the services tab, look for the weekly market analysis, and just enter your name. You will get the newsletter each Sunday straight to your emails. Thank you very much again. See you in the next video.